Have you noticed that no matter where you look, the price tag seems wrong? Whether it's the house down the street, the stocks in your portfolio, or even digital assets, everything feels expensive at the exact same time. Traditionally, when stocks go down, gold goes up. When the housing market cools, investors find safety elsewhere. But today, the old rules of diversification are breaking. We are living in what economists call the everything bubble. At WealthLogic, we provide the in-depth analysis you need to stay ahead of the curve. Today, we're peeling back the curtain on why every asset class seems overvalued at once, the role of central banks in this phenomenon, and how you can navigate this fragile landscape with confidence. To understand the everything bubble, we have to look at the fuel behind it. Interest rates. For over a decade, central banks kept the cost of borrowing near zero. This created a world awash in cheap money. When it costs nothing to borrow, people don't keep their money in savings accounts. They look for yield. This forced a massive migration of capital into the stock market and real estate. As we explored in our analysis of the AI bubble, when there is too much liquidity, it creates speculative frenzies that eventually spill over into the mainstream. In a healthy economy, different asset classes move in different directions based on risk. But in an everything bubble, they move in tandem. Look at the real estate market. Despite rising interest rates, prices in many regions remain at historic highs due to limited supply and institutional buying. Simultaneously, the stock market has been driven to record valuations, often disconnected from the actual earnings of the companies involved. This creates a dangerous scenario. If everything is inflated by the same tide of cheap money, then everything is vulnerable to the same ebb tide. As we saw in the 2008 financial crisis, when one major pillar collapses, the contagion spreads faster than most investors are prepared for. So how do you protect your wealth when nothing seems like a bargain? First, look for value in the shadows. Avoid the crowded trades. Second, understand your risk. In an everything bubble, traditional diversification can be an illusion. If all your assets are tied to the same economic factors, you aren't as protected as you think. Finally, prepare for volatility. Stay informed and ahead of the curve by maintaining liquidity. Having cash on hand allows you to buy when the bubbles inevitably begin to thin. Markets can stay irrational longer than most people can stay solvent. The key to navigating the financial world with confidence is recognizing the difference between a growing economy and an inflating bubble. Understanding these economic trends is the first step to mastering your money. For more clear, concise, and actionable content on the global markets, subscribe to WealthLogic. Stay informed, stay ahead.